Hey, hello investors and future investors. Welcome to the channel. For today's video, I'm going to be showing you how to trade Nvidia during earnings. Now, if you are new to options trading, then these option strategies, I'm going to try to make them as simple as I possibly can in order for you to understand as well. Now, if you are interested in learning options, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I will be showing you how to trade Nvidia during earnings season. Now, just for perfect clarification, I do not do options during earnings. But if you do want to do options, I will show you a couple option strategies that can be used, especially on Nvidia, if you want to get some income. Now, Nvidia is one of those most anticipated earnings that's going to be here. And the reason for that, depending on how the earnings go, this could have ripple effects for the entire market as a whole. So, hence, we're going to go ahead and do Nvidia. Now, before we go ahead and do Nvidia, if you guys want more resources in order for you to keep learning with options trading, then I suggest you guys go over to Moomoo and go ahead and open up an account. When you go ahead and open up an account and you deposit some money, then you will have all of Momo's free access to all the resources here. Some of the resources that you can use is those geared towards options trading. So for instance, you can see options, markets and news, options trading course, and how to trade options. Most of these resources here are free once you have an account open. Now, if you're interested in helping out the channel, then I would like you to very much go ahead and use my Momo link in the description below. Now, let's go ahead and get into these option strategies for Nvidia. Now, here's a little fun fact for you. Whenever Nvidia release earnings, for the past couple of earnings, the share price always goes down the week after earnings has been released. Now that you have that information, I want you to let me know in the comments below. With that information I just gave you, what option strategy would you use? More specifically, what income generating option strategy would you use now that you have that information? Now let's go ahead and get into these option strategies. So what we're going to do now, we're going to go ahead to trade Nvidia options down here in order to go ahead and open up the options chain. Now we're going to go ahead we're going to go to sell, and we're going to go to call, and then we're going to go ahead and choose our strike date. The strike date I will be using is going to be the strike date of December 5th, which gives me 18 days to expiration. The reason I'm going to go ahead and use December 5th expiration date is, like I just mentioned to you, a week after earnings, Nvidia's share price usually goes down. Now, before I go ahead and get into these option strategies, I would like you guys to do yourself two favors. Favor number one, always make sure to do your own due diligence before investing. What may work for my portfolio, quite frankly, may not work for yours. Favor number two, always make sure you have an exit strategy before getting into any option contract. That way, if the trade do decide to go tits up, then at least you know how to get out of the trade. And lastly, these videos are for education and entertainment purposes only, and they merely represent what I'm doing with my personal portfolio. So once again, always do your own due diligence. So now that we have sell and we have call and we have our expiration date, I think you guys know why I'm going to choose this expiration date. I'm going to tell you. I just mentioned always have an exit strategy before getting into any options trade. Now that I know Nvidia share price usually falls 1 week after earnings release, I want to give myself an additional week in order for this trade to work in my favor. So here goes. Now we have sell and we have call and we have our short expiration date. We're going to go ahead and choose the strike price. The strike price I will be choosing is going to be above the current share price, and the current share price right now is going to be 185.89. The market is still open, so there might be some bit of some fluctuation. So the strike price I'll be going with is going to be the 205 strike price right here. Now with the 205 strike price, that gives me a chance of profit of around 82%. That means the probability of me winning this trade is around 83%. Let's go ahead, we're going to select that. Now we're going to jump over to buy, and we're going to maintain our call and maintain our exact same strike date, and we're going to be choosing the next strike price up, which is going to give us the 207.5. We're going to go ahead, we're going to select that. Now we're going to be changing the parameters just a tad. Let's go ahead to sell and put, and we're going to maintain the exact same strike date. And now we're going to be going down and we're going to be choosing our strike price. The strike price I will be going with is going to be the 170 right here, which gives me around a 79% chance of profit, meaning that there's only a 20% chance that this trade goes against me. Let's go ahead, we're going to select that one. Now we're going to go ahead to buy while maintaining put and maintaining the exact same strike date. And then we're going to choose the one right below it. Let's go ahead and select that. This option strategy that can be used for Nvidia's earnings is going to be known as the Iron Condor. The reason why you want to use the Iron Condor for Nvidia options is because the Iron Condor is what's known as a non-directional. The reason why it's non-directional is that it does not matter whether the share price goes up, the share price goes down, or the share price trades sideways. What you're looking for is for the share price to not go below your parameters, which is going to be the 170 on the bottom side here and the 205 to the top side. Now, how did I go ahead and select the strike prices? Well, I use a simple tool known as the expected move, and I have shown several videos of how to get the expected move. So the expected move for Nvidia for the particular strike date is going to be 200 on the top side, and on the bottom side is going to be 172. So what I did is I went ahead and I go even lower on the bottom side. I went even higher on the top side just to give myself enough wiggle room. So the Iron Condor is one option strategy that can be used for Nvidia's earnings. Now, while doing the Iron Condor, you're going to have to leave a collateral. The collateral you're going to have to leave for this is going to be $250. You're going to determine your collateral, and that's going to be based on your strike prices right here. So it's going to be 170 minus 167.5, which is going to give you $2.50. We are dealing with options contract. So you're going to multiply your $2.50 by 100 shares because each contract does have 100 shares, and that's going to give you $250. So what you're going to be looking at now is going to be your ROI, which is one of the most important things. The ROI on this is going to be, you're going to divide the amount of money you're going to be receiving, which is going to be $95 right here. The Iron Condor is also known as an income generating option strategy because when you go ahead and execute an Iron Condor, you receive money right away. That money you receive is always going to be yours to keep no matter how the trade goes. So your ROI, or your return on your investment is going to be the collateral you left of $250, and your return is going to be $95. So your ROI, you're going to just divide your $95 by the investment you put down, which is $250. And that's going to give you a 38% return in just a matter of 2 weeks. Now, a 38% return in 2 weeks is an extremely lucrative return. Now, I did mention always have an exit strategy. Part of my exit strategy would be to make sure I know when I'm going to get out of the trade and know what's happening. So I did mention Nvidia always goes down in price a week after earnings. So I gave myself some extra time. The reason why I give myself some extra time is that I'll be looking to get out of this trade before expiration date. So whenever I'm up on a trade of a certain percentage, and that percentage is always going to be based on your portfolio goals and your risk tolerance. Once that's hit, then you go ahead and you close out a trade and you go ahead and lock in your investment gains. Now, there's another option strategy that can be used to trade Nvidia options, and let me go ahead and show you that right now. So we're going to be retracting with these option strategies. So let's just clear right here. Let's clear the other one to the top side right here. And what we did, we just altered our Iron Condor. We took off the bottom part of the Iron Condor. So what we have now is just the top part. The top part now is going to be known as the call credit spread. The call credit spread is another income generating option strategy that can be used to trade Nvidia during earnings. The reason why I would want to use the call credit spread is because I mentioned this about 3 times so far. Nvidia share price usually goes down a week after they release earnings. Now, the call credit spread is a bearish option strategy, meaning that if you do decide to implement the call credit spread, you're of the mindset that Nvidia share price is going to trade sideways or it's going to go down. And even if it will go up a bit, it's not going to hit your 205 price right here. So the odds of you winning this trade is definitely in your favor. Not only do you have a higher than 80% chance of winning this trade, there's also another factor that helps you put the odds in your favor, and that is Nvidia is going to need to go extremely close to its 52-week high in order for it to lose this trade. The 52-week high was around 212, so Nvidia needs to go really close to the 212 mark, which is going to surpass your 205 in order for this trade to go against you. So investors and future investors, I do not trade earnings. But if I were to trade earnings, these are the 2 option strategies I would be implementing. The first option strategy is going to be the Iron Condor. The Iron Condor is a 4-leg option strategy, so it might not cater for people with small accounts portfolio, because if you have a small account portfolio, that probably means you don't have enough options experience. Now, the other option strategy that can be used is going to be the call credit spread. The call credit spread is only a two-leg option strategy, so that's going to cater more for people new to options trading and also people trading with a small account. The difference between the two is that your ROI on your Iron Condor always happens to be higher than your return on investment on other options. So we did calculate the ROI on your Iron Condor, which is going to be a 38% return. Now we're going to calculate the return on your call credit spread, which is going to be 47 divided by 250, and that's going to give you an 18% ROI. So for the call credit spread, you're going to be receiving a credit of $47. Remember, that's yours to keep no matter how the trade goes. And your collateral you're going to have to leave is going to be $250, which is going to give you an ROI of 18%. With the Iron Condor, the amount of money you're going to be receiving as soon as you do the trade is going to be $99. The collateral is going to be the exact same of $250. However, your ROI or your return on investment with the Iron Condor is going to be way higher. It's going to be 38%. So there you have it, investors and future investors. These are the two option strategies that you should want to practice if you're going to trade earnings or if you have additional information about whatever stock that you're going to be trading. So remember, let me know which option strategy that you guys think is the best option strategy to use on Nvidia during earnings. Now, for those of you guys that made it to the end of the video, you guys are the real investors and future investors. If you guys have not already, now would be a perfect opportunity to go ahead and like the video, subscribe to the channel. Make sure to hit that notification bell to get an alert when I post these videos, and I do post pretty often. Now, the whole point of me making these videos is an attempt for me to help as much people as I can start making income from options trading. So if there's anyone you know out there struggling to grow a small account portfolio, then the right thing to do is to go ahead and share this video with them. Together, let's help as many people as we possibly can start generating income from options trading. Now, until the next video, keep pushing your investments.